We do quite some research on sustainability in real estate at Maastricht, together with, for example, Niels Kok and also Dirk Brown of the University of Tilburg. And so I just have 15 minutes, so I'll just give you a sort of very high-level overview of some of the research results of that. And I want to talk about building performance, the performance of different types of investor related to their greenness. I want to talk about where the industry is moving. I think that's very important given what you just said. And I want to talk about a very interesting new phenomenon, which is green financing through green bonds, and which is, I think, really another thing that will drive sustainability into the sector, because it gives a very clear incentive to investors to become greener. Well, this is just a graph that illustrates the same thing that Josefina has said. This is for the United States, because for the EU we don't have, as far as I know, comparable pan-European numbers. But just you said that of all US electricity consumption, 2/3 is in buildings. So that means that you could say buildings pollute. That's probably not true. We pollute in buildings. And an interesting illustration of that is this door. Maybe you don't know it, but this door was open until 10 minutes ago for like 3/4 of an hour to regulate the temperature in this room, because obviously the temperature in this room is far too high. So now we all practice, we all preach sustainability, and that's what this day is all about, and yet we don't practice it. So so this is interesting. So we could easily probably do it better by keeping the door closed and putting the heater down. Well, this is an example of a very recent green building in my beloved city of Amsterdam. It's called The Edge. It's the new headquarters of Deloitte in Amsterdam. It has a BREEAM Outstanding rating. And it's claimed to be the first BREEAM Outstanding building in Europe. And one thing that is interesting in these building labels is that BREEAM Outstanding is something new. There was no BREEAM Outstanding, but there was BREEAM Excellent, for example. And then there were so many buildings that become BREEAM Excellent, then we have to invent a new category to get even more ambitious. And that's what you see in all these labels. So that's one sign that the industry is actually improving its ways, because we're going from silver to gold to platinum to diamond to, well, I don't know what's next, but you see, and that's, I think, a hopeful sign that an industry as conservative as the real estate industry is in fact already moving in the right direction. And granted, Josefina, these labels are mostly about energy and not so much about, let's say, environmentalism in a more holistic way. But I think the signs are right. Now, the question is then, nice that these buildings perform well, but is this just doing good? Trying to save the planet, or are we actually making money in these buildings? And our research is very much about that. What are the economic effects of greenness in building? Can you actually earn it back? Now, and let's say our results are hopeful because we show, in fact, that green buildings perform well. For example, we have done a lot of studies in it, and the couple of main studies that we did showed that these green buildings have higher rents, 2 to 5% higher rents. Maybe even more importantly, they have a higher and a more stable occupancy. Now, an occupancy risk in real estate is actually the key driver of risk. The rents stay kind of the same over the cycle, but the differences in the cash flow you see through the occupancy. And so if occupancy is more stable, that means that green buildings are less risky. And that, I think, is the most important news that you see here. And if you then multiply the contract rent with the average occupancy, then you get a higher cash flow. So the cash flow is 6 to 7% higher. And then if we look at transaction prices, which we do for thousands of buildings, you also see that transaction prices are 11 to 13% higher. Now, we did this research in 2007, we did it in 2009, we did it later on. So, and basically it always got confirmed, but people then said, well, Piet, very nice that you find this, but this is really just fashion, right? This is a fad. People want to say, we're environmental, it's good, and the fashion will go away, and then this will go away too. And then we said, well, maybe it's just cold-hearted bottom line calculation. So we said, well, let's look at the actual energy bills of these buildings. What do the tenants pay? And then we showed that if if the building, by being green, reduces the energy bill by $1, that is then paid back 95 cents in a higher rent. So basically what tenants do is say, well, I don't really care whether I want to pay this sort of cost, and I don't really care whether I pay it in energy cost or in rent. I swap the one for the two. And if that's what we find, so then I don't think it's fashion, it's here to stay. And since we did that research, many other people have done the same sort of research, not exactly the same, but the same type of idea. Do we find that green buildings are performing better in terms of rents and prices? And this is just a little list of people who have also investigated this for housing, for other types of real estate, for offices, in other countries. It has been investigated in Asian countries, here in Sweden, in the Netherlands, in the UK, in America. And basically the numbers are different. It's not always 2%, it's not always 12%, but the ballpark is the same. There's higher rents, there's lower risk, there's higher prices. So that, I think, is very good, because that means that just through business thinking, that's already a very big incentive to go green. And then what happens at the investor level that you were talking to? What do the investors do? Now, we couldn't do this for an EU sample, because we don't have one country with enough property companies. But we said, well, let's take a look at the level of the property company. And then listed property companies, we had to look at the US. And when we looked between 1 to 6% of the property portfolios of these US property companies were green, measured by either the LEED label or the Energy Star label. So an Energy Star label is completely an energy label, of course. LEED is a bit more holistic. And what we found is, I think, very interesting, because we found that the return on assets, the return on equity, and the free cash flow, so very important drivers of a company's performance, were all higher for green property companies than non-green property companies. And we measured green by just looking at how many buildings in their portfolio have a LEED or an Energy Star label. And interestingly, these measures, the return on asset, that's the net of cost measure. So in the previous research, we just looked at rents, but we didn't know what you have to invest. But the return on asset is the net result of investments and outcomes. And that also holds for the free cash flow, and it also holds for the return on equity. And if these are higher, you actually see that there's a net benefit to being green, which is even more important news than what we found before. We don't find abnormal stock returns, so the market has already priced it in. But importantly, we also find here that these greener property companies have a lower beta. And beta is the measure for systematic risk. And we expected that, because this is, let's say, risk at the portfolio level. And we already knew that risk at the building level was lower. So it also makes sense that that translates into the portfolio level. So, and the interesting thing is that many of these REIT CEOs are diehard Republicans. And so, of course, we did a lot of presentations of these results in the United States. And in the United States, if you talk about sustainability and climate change and stuff like that, they think you're a communist. But then we said, you can find me a communist, that's all fine. But if you want to decrease the risk of your portfolio, this is probably a good idea. Right, and then, no matter whether whether we have a warming planet or an increasing ocean or all that nonsense, or if you think it nonsense, I don't, but they do, and so it's still probably a good idea just from a business point of view. That's the main message here. Now, then we got involved in another initiative from the university called GRESB, the Global Real Estate Sustainability Benchmark. And basically what we did 5-6 years ago, we started presenting our research for pension funds, for example. And they told us, well, great research, really nice, but your research is at the building level and we don't do buildings. You don't do buildings, you invest 10% of your assets in real estate. He said, yeah, that's right, but we invest through property companies and property funds. So the decision making to go in certain specific individual buildings is no longer ours. That decision is taken by these funds. So, and what we don't have is a good yardstick to measure the sustainability of these funds. Can you help us create that? And we said, yes, we can. And that's GRASP. So we did that first for a couple of pension funds, APG, PGGM, and USS. And then it enlarged to not this group, but a much bigger group. But this is just a couple of these names. And basically, what now has happened is that we measure the performance of listed and non-listed property companies, and we do that for their equity investors. So, and that's, I think, a very important thing, because it means that things that were not measured before are now measured. So that means that if people know where they are, they can get into action. Basically the same argument that you just gave for your efforts at the building level. And it's actually working. And it's also the mission of GRASP. The mission of GRASP is actually to enhance sustainability performance and thereby to enhance financial performance. Because we think, based on our research, that the two go hand in hand. It's not sustainability I do in the weekend and business I do Monday to Friday because that's making money. No, actually, sustainability is about doing business, is about making money, and more sustainable property companies probably make more money. Now, let's see where the industry is heading, because this is really interesting. Now, this graph doesn't really work. You don't really see it, but there are lots of gray dots here, little gray dots. And the little gray dots are property companies that are not yet green stars. And the little green dots here are property companies that we call green stars. And all these dots together are all the property companies and property funds in Europe. Now, what we do with this survey, we say, well, we have a whole lot of questions about all kinds of things, but we group them in two categories to give you like an overview of the result. And these two categories are, it's very simple. The first is called management and policy. It's basically, do you have a plan? Do you communicate that plan? And are you committed to that plan? And do you have people responsible and incentivized to execute the plan? Because without a plan, you can't do anything, right? And the second is then implementation and measurement. And of course, that's in the end what counts. And implementation and measurement is how are your KPIs, what are your key performance indicators on energy, on CO2 emissions, on waste treatment, on water treatment, etc. So your holistic measure, Josefina, it's all there at the portfolio level. So how are you doing in these things? And of course, so if everybody would be fantastic, everybody would be here, right? So in Latvia, for example, from a European point of view, right? All the way here. But now, and these dots are the European average. So what we saw when we did this in 2011, Europe's average was here. And then what you see first is that Europe was heading in the right direction, 2012, 2013, but mostly there were more plans. So in terms of actually KPIs, in terms of real performance, there was not much improvement. And then this year, there is a lot of improvement in implementation measurement and actually the key performance indicators of greenness. And so Europe actually is really doing better, and we see a lot of the property companies are green stars, and we see on the whole that the industry is moving to the northeast, and that's where we want the industry to move. So that's fine. Okay, even without, before you have your label, so that's hopeful, but we're not there yet. This is comparing Europe with the averages for Asia, North America, and Australia. This is a global measure, and you see that we're doing slightly better on average than Asia and North America, but sort of we're in the same ballpark. But if you compare Europe's average performance with Australia and New Zealand, where Australia and New Zealand, the average property company is a green star, we're not there yet. There's a whole lot still to be done. So Australia, you could say, is the global best practice when it comes to greenness on the portfolio level. So maybe you also want to look there at what they're doing and to get some inspiration there. And I don't know if it's driven by Australian sort of national benchmarking, maybe not, but they're doing something good there. That's for sure. Okay, now so this is hopeful. So the industry, so we see it's good on the building level, it's good on the portfolio level, and the industry is heading in the right direction. Another really, I think, fascinating development is happening on the credit market, where about a year ago the first ever green real estate bond was issued in the United States by Vornado, and in this spring, one of the main European property companies, Unibail-Rodamco, issued a 750 million euro green bond for a 10-year fixed rate green bond. Unibail-Rodamco is a pretty green property company, and they said, well, to finance our green assets, our assets that do well on different yardsticks of sustainability, we issue these bonds. And this bond was a huge success. And so it was actually issued at an interest rate quite a bit below what the investment bankers had anticipated. In other words, Unibail-Rodamco has a pretty much lower cost of capital because of their greenness. So the capital market has provided a very strong incentive to Unibail-Rodamco to be even greener, because it says, hey, we like green, lower cost of capital, probably because lower risk. So these risk things that I showed you before are, as it were, acknowledged by the capital market on the debt side. That is an incredibly strong driver for further greenness in the market. That's your users. That's your users. They're driven by that. And since then, more of these green bonds have come on the market. Now, we've also done a little research on it, actually before this was issued, where we look at US REITs again, to get a nice big sample, and we look whether these REITs, we look at their credit rating, we look at their bond spreads over US treasuries, and we look at the performance on the mortgages of these property companies, and we show that greener US REITs have a better rating from Moody's and S&P and Fitch. They have a lower yield spread, and they have a lower yield spread on their mortgages. So there again, we already saw before these green bonds were issued that the capital market creates its incentive. Now, this is my last slide, James. So to sum it up, these green buildings, they perform better. They have a higher rent in price and a lower occupancy risk. Or at the portfolio level, we see the same sort of thing. Higher operating performance, lower risk. So clear incentives to become greener. The GRESB results show that actually the industry is moving in the right direction. And I think that the capital market has just created, let's say, with these green bonds, one of the most powerful incentives to go greener that there have ever been. So to sum it up, real estate sustainability is good business. It's not about doing good, it's about doing good business. And that means that we have the profit motive, and profit motive is one of the best incentives to get people mobilized.